This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. India said it will speed up its diversification of oil imports to hedge against any surprise output cuts by the Organization of the Petroleum Exporting Countries and its allies. This will hurt large importers like India, who spent around $120 billion last year on the import of petroleum products, India's Oil Minister Hardeep Singh Puri said on Friday in reference to an OPEC Plus decision last week to cut output by 2 million barrels per day. As the world's third largest consumer and importer of oil, India buys about 85% of its needs from overseas, while its energy demands are set to rise to power its economic expansion.
Russia has cut gasoline rail exports via its ports and border crossings in September by 14% month-on-month to 256,204 tons amid refinery maintenance and weak demand in Europe. Data from industry sources and Reuters calculations showed. Gasoline is in surplus in Europe because stocks are building as refineries were previously maximizing throughput with margins supported by gasol and diesel prices, according to James Burley, principal analyst at Wood Mackenzie. Also, naphtha has moved into the gasoline blending pool as a result of low demand up the Rhine, Insight Global's Lars van Wageningen said.
Moving on to the top news in the energy sector.
Oil prices plummeted more than 3% on Friday as global recession fears and weak oil demand, especially in China, outweighed support from a large cut to the OPEC Plus supply target. Brent crude futures dropped $2.94, or 3.1%, to settle at $91.63 a barrel, while U.S. West Texas Intermediate, WTI, crude futures fell $3.50, or 3.9%, to $85.61. The Brent and WTI contracts both oscillated between positive and negative territory for much of Friday but fell for the week by 6.4% and 7.6%, respectively.
Traders are diverting Europe-bound tankers carrying diesel to the U.S. East Coast as the two regions battle for supplies amid an acute shortage and soaring prices. At least two tankers carrying 90,000 tons of diesel and jet fuel are heading from Europe to the U.S. East Coast, according to traders and Refinitiv ship tracking data. The Thundercat, carrying a cargo of diesel from the United Arab Emirates, on Thursday changed its destination from the Dutch port of Rotterdam to the New York harbor, according to shipping data. It is currently in the Mediterranean.
Next, we have the top news in metal markets.
Iron ore prices are on track to end 2022 at their lowest in the last 3 or 4 years and will probably languish next year as well, with China and Europe cutting steel output, while pressure mounts from additional supply. Price forecasts for the key steelmaking ingredient range from about $90 a ton to a high of $115 by the end of the year, a Reuters survey of 5 analysts and researchers shows. Year-end prices have not been in this territory since the 2019 figure of $93 a ton, itself off the even lower 2018 level of $72.60, data from consultancy Steel Home shows.
Aluminium prices fell on Friday as rising inventories pointed to ample supply, reversing some of the gains that followed news this week of a possible U.S. ban on imports of Russian metal. Russia produces 6% of the world's aluminium and U.S. measures to block trade in its metal could disrupt the market. The London Metal Exchange, LME, is also considering barring Russian metal from its system. When the fundamentals are so relatively weak, we would need to see real action for prices to rise, said Saxo Bank analyst Ole Hansen. We will now look at the top news in the agricultural sector. Year 1x wheat fell on Friday, reversing day-earlier gains, as traders waited to see if talks planned this weekend between United Nations and Russian officials would yield progress towards extending a wartime corridor for Ukrainian grain. Renewed recession fears among investors also curbed grain markets, dealers said. December milling wheat on Paris-based Year 1x settled down 1.5% at €350.75, $341.24, a ton but held chart support at €350. It was up 0.8% over a volatile trading week that saw it hit a 3.5-month peak before giving back most of its gains.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.